Good morning, it's Jeffrey Cohen, founder, president of U.S. Advanced Computing Infrastructures, Inc. We are a consultancy in Highland Park, Illinois. We're also registered investment advisors. We run quantitative models. We get involved with a lot of quantum computing things. And we're here to talk to you about stocks. We're here to talk to you about the markets. And the theme of today's video is that this is a tale of two markets, that there's a bifurcation in the market. So first off, today the market's up. Today the market is doing great. Today the market is like, wow, I can't believe, this market. So you look and the S&P 500 is actually down a tick, 0.01%. And you would think, oh, this is terrible, right? Market's down, but it's not. So what happens is the market's down, but the stocks that our model picked on the 24th for Monday opening, right, in general, making a big profit. And so the question is, what happened? And by the way, Jeff, why are you wearing a tie and a suit? What happened today? What are y'all looking fancy for? And the truth is, I've got a business meeting, a potential client meeting, and so I want to look nice. It's a Hickey Freeman suit, nice conservative red tie. I feel good today. I do. I love it. And so I want to talk about this. So market, it's not perfectly up, but it's up. And if you look at the market from a week ago, the 6 stocks that it picked, they're up too. So you're doing well right now if you are in somewhat risky stocks. And the call that I made this morning was on Bitcoin. So I had said Bitcoin is up to almost 30, and that is the ultimate in risk on assets. And you can see this morning screaming higher. Bitcoin is just screaming higher. And so, not that I want anyone to buy Bitcoin, but it is a good proxy for risk assets. And so, I'm going to move that over to the side. Now, I got a lot of stocks and a lot of things that I track on a daily basis that I have up on my screen. And I'm happy to share with you. But I'm going to stick to the model, right? So, Jeffrey, you run a model. And by the way, I love it because I've been doing a lot of stuff with quantum computing recently. And so getting really back involved in the quantum ecosystem. So if we go back, you can see risk-free return is 5.1%, which is probably a touch high given interest rates right now. Market return is 8.63%, which is a 7% capital appreciation, 1.63% dividend yield. So Jeff, what does all that mean? And why are you telling us? Well, the first thing it means is the power. The CQ&S power of our model is 4. So what that means is that the risk in the stocks is going down relative to the expected return. That's why we say tale of two models, tale of two markets. Is because, what are the best stocks? They're the ETFs, right? There's no mystery. S&P 500 is the best stock. Well, yeah, because it's 500 stocks, right? It's got to have a lot less risk. And the QQQ is the second best. And 1 to 3 year treasuries is the third best. High yield corporates, the Russell, and a dollar bearish fund. So there's no surprise here. The market is as you would expect. And then you get a lot of really low-risk stocks, P&M Resources. If you follow the show, you know what I'm talking about. Berkshire Hathaway, MoneyGram, Crestwood, Icon, Coca-Cola, Thomson Reuters, Cintas, Illinois Toolworks. This is more like your father's Oldsmobile than it is like a Firebird, okay? These are slow movers. Yum Brands, Accenture, Pepsi, McDonald's, Mondelez, automatic data processing. What better proxy for the whole U.S. economy than a company that sells services to most small companies? And then you got Honeywell. And then you got the Canadians, of course, because the Canadians tend to trade with a lot less risk than others do. So that's cool. That's just what they are. So Bitcoin still looks good. The model looks normal. It's calibrated for a low annual return. By the way, how do you like our logo? U.S. Advanced Computing Infrastructure with the hand shaking. I hope you like that logo because that's our logo. I don't mind it. All right. So where are we at here? Jeffrey, show me the money. All right. Your best pick is a 13 stock model. And it's got like Affirm, Digital Turbine, Cenex, which is an aluminum company, MicroStrategy, Square. UEC is a uranium company, Wayfair, right? So Synaptics. So you've got pretty Marvel. You got pretty Confluent, pretty risky picks. And there's 13 of them. So you've got about 8% of your money in each one. That's kind of risk on. I mean, it's not very risk on. It's kind of risk on. And that portfolio is up today. That's what I'm trying to tell you. The market is up for risky, even though the overall S&P 500 is not up for risky. So it's a good day today for the Chicago Quantum Net Score. We took a look at some other stocks that were leptokurtic and platykurtic, but honestly, there's a lot of math that goes into analyzing those, and it's not that interesting for the video. So I'm going to go down to the very bottom and talk about negative beta stocks. So we have a bunch of negative beta stocks. Now, a number of them are ETFs. So what I mean by that is that these ETFs are synthetic investment vehicles. They are made to act in a certain way. And so, you can have a dollar bullish fund, right? When the dollar goes up, the stock market goes down and vice versa. So no surprise, negative beta. That's the logic you should be applying here. Small cap bear. So when stocks go up, a bearish bet on stocks goes down. That's negative beta. VIX. When the short-term VIX goes up, stocks go down because VIX is volatility, and volatility is bad for investors. They, generally speaking, don't want volatility. They want calm seas. They want to sail to retirement on a clear, like a lake, right? They don't want day trading. They want to invest and sleep, right? But there are a number of companies here that are also kind of trading against the market. Now, a lot of them I never heard of. It's like Chesapeake Utilities is just a weird bird. Now, Summit Therapeutics I was not expecting to see on this list. I see U-Haul, which is crazy, right? But I guess when the economy does well, people don't need U-Hauls. But honestly, they need U-Hauls. I don't know why that one's just an anomalous behavior. But like Sphere Entertainment, Mercury FinTech, Mercurity FinTech, Innoviva, Crane. I don't know why any of these guys are negative beta, but it's worth a look because they're anomalous. They're anomalous trading situations. Could be interesting. The other thing I want to point out, you talk about a tale of two markets. These are dividend payouts last year. So actual dividends paid over the past 253 trading days divided by, divided by the average closing price adjusted for the stock over the past 253 days. So if they paid a dividend like in an odd time, that's fine. You might carry it a little longer. And it's not a forward-looking, it's backward-looking. So shipping at 80% dividend, 77% dividend. Albertsons, more shipping. Now you got some REITs. Some REITs really did well. Now I don't know why European Wax Center gave a big dividend. More shipping. El Pollo Loco, 16% actual dividend paid. Anything with an LP, limited partners, right? Those are master limited partnerships that are traded. So those are just, they did great. They paid a nice distribution, and now maybe they won't pay the distribution later. Eagle Bulk Shipping, right? So I don't know. These are all interesting. I used to be of the mindset that a large dividend yield was a blessing. And now what I realize is a large dividend yield, it's like a PE ratio, price to earnings ratio. It doesn't necessarily mean anything. It's just something you got to work through. You got to understand the story. New Star Energy LP, Cross America Partners LP, Blackstone Minerals LP, Antero Midstream paid 11% last year. So the question is, will they pay 11% this year? If so, that's a pretty good distribution. But what's the earnings that they're giving you as well? So you just kind of have to go through it all, right? Sturm, Ruger and Company, the great Ajax Corporation. I think Ajax is pretty good. I get it at Dollar Tree. I didn't know they were paying a 13% dividend. What does all this mean, right? So those are your dividend yields. So you got negative beta, which is anomalous. You've got dividend yields, which are through the roof. Through the roof. And when interest rates are rising, dividend yields aren't what they used to be. They aren't worth as much. Build-A-Bear Workshop paid 8% last year. Who would have thought selling stuffed animals in a shopping mall was worth an 8% dividend? I never would have thought it, right? And so you just got to work through these. If you like a Build-A-Bear, maybe you buy some stock. I don't know. Not investment advice, but just interesting, right? And again, coming back to it, the variance of all these stocks is 6.4 times 10 to the negative 5. 6.4. The variance of the S&P 500 is 4.0. So 40% more. 40 to 64. No, it's 60% more variance. The market holding every stock in the stock market has 60% more variance than the S&P 500. Why is that? That doesn't make sense to me. I would think it was a little bit more variance, not 60% more variance. So holding all these stocks is more risky than the S&P 500. So what I would say is, I bet you that the S&P 500 has been in a consolidating pattern with low variance. I bet you if we were to look, it would be crazy what we would find. So let's take that look. If I look at 1 year, because the model just looks at 1 year, and you see the S&P 500, it looks pretty darn flat. So what does this say? This says that the S&P 500 is a lower risk, historically speaking, lower risk investment. And that's odd to me, right? Because I don't think of the S&P 500 as low risk. But I guess if you look at it, we're trading right now 4,063. Let's take a look. There's a way to do horizontals. Let's do that. I like horizontal better. Boom. 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 So you can see the market is pretty flat. It's trading almost like musical notes. And what that means to you as an investor is that no matter where you buy in, wherever you bought in the last year, you're pretty much right around where you were. There's not a lot of risk. There's not a lot of timing risk in this market. Now you could argue, well, Jeffrey, I could have bought when it was 3,600 and I could have sold when it was 4,300. Yeah, that's great. But more likely, you bought and you sold right when it was around 4,000. And so you didn't make much, you didn't lose much. This is like an accumulation market. And so that is a nice market for people. I'm going to move this to another screen. We may come back to it. So the S&P 500 is consolidating. It has less risk. And so maybe it is a good time. Pick up some investments in the overall market. Although it does have 60%, and it has 60% less variance than the overall 3,700 stocks that we're looking at. How many stocks? 3,408. So if you bought 3,408 stocks evenly, you would have 60% more variance than if you just bought the S&P 500 and you called it a day. So that's interesting, right? So now we're going to look at ATI Physical Therapy, which is our one long holding. And you can see there's 100 shares offered at 28 cents. There's 100 shares desired bid at 27. So 27 to 28. This is 26.5 to 32. This is 26.5 to 29. And this is 27 to roughly 28. So there's a 1 penny or 4 cent spread. So my guess is that nobody wants to trade today on ATI Physical Therapy. I bring that up because this stock has been a little choppy lately. And it looks like today, it's just taking a pause. So if we look at ATI Physical Therapy and you look at it, let's say on the 15 minute, I don't like this chart. This is crap. At the 1 hour, it's too choppy for what I'm trying to do. If you look at the 1 hour, you see how flat that thing is. Draw horizontal lines. Look at that thing. It's just not even funny, right? Now, you can see we're in a consolidating pattern after hitting a low. And so when I see a chart like this on ATI Physical Therapy, I think it could very easily break through that low again. These musical notes aren't telling me anything. They're just telling me the stock likes 27 cents. But the stock was just as happy down here at 24 cents. And so, yeah, it's interesting. You look at shapes in the market, right? Data in the market. What else do we see? That's interesting. Let's go to FinViz. So you look at FinViz. This morning the market was up. Remember I told you that risk on, risky look good. Well, I'm going to go back to my Monday portfolio. It's still looking pretty good there. You still make money today, right? So your Chicago Quantum net score long portfolio looks good. The Chicago Quantum net score long portfolio from a week ago Monday looks even better. And so today's the day. So you hold this portfolio for days when there's a little bit more risk, a little rotation into risk. And so rotation into risk, that's great. Rotation into risk for ATI Physical Therapy is terrible because nobody wants to trade this because it's not a risk-on stock. It's a very specific stock. It's for very specific situations. And so what else do I have here? I got to get out for my meeting soon. But so market's up for Chicago Quantum net score. There's lots of little dog stocks here that just don't mean anything, right? Like Fathom Digital Manufacturing. I want to buy this stock. I like the stock. I like the company. Let's put it that way. I like the company. I like the vision. I think I'm going to end up buying the stock for like 2 cents a share. I think it just drops to the floor. And I'm sorry, but it's true. I think it's just going to drop, right? If I look at this chart and I get just a sense, copper's kind of flattened out at 385. 385 is pretty cheap for copper. You can see oil continues to fall, which is a recession bet on some level. You see the S&P 500, though, at 4084 and the VIX at 2075. You're right in the range. The currency, the U.S. dollar at $1.11 in euro. The dollar's weak, which should mean that the market is strong for equities, but it's not. We look at the bonds. Bonds look pretty strong. And so, again, the market is dropping, but it's not dropping much. Look at that. It's down 0.01%. So what I call this market, let me bring back the bring back the chart. So this is the S&P 500, the S&P 500. And you look at the stochastics on the bottom, the momentum, and you can see the momentum is up and down and up and down, and there's not really a trend, although the recent trend is down. So not helpful if you have a bunch of stocks and you need to live on the money right now, but great if you're buying. Because if you're buying, the market's weak, right? You see we had a lot of volume. This is this big picture. A lot of volume right there in March, middle of March, Ides of March. Oh, look, beware the Ides of March. Well, the market was like 36, 37, 3,800, 3,900. A lot of volume. Now we're in low volume. Market peaked up, so there was no commitment. And now, we had a good volume day here on the 25th, yesterday, and the market dropped. So the market is falling on higher volume. That's not helpful. That's actually the opposite of helpful, right? And we're stuck in this trading range for a year. And so if you've been trading this past year, the term beach chop should come in handy, because that's when you scratch up your elbows and your knees because you rode the wave and you got smashed into the shore. It's very short, small waves that have their own kind of mind of their own. And again, I look at ATI Physical Therapy, which is a stock that we hold. It's a small position in a taxable account. It's not a lot of money, but it's pretty flat. It's not really trading. I'm going to go to my meeting. I'm going to come back, and I bet you it's right at the same price, and it just doesn't matter. So, any questions? Let me look at the board. No questions. So, let's go back to the main lesson here. The main lesson here is look at Bitcoin. Bitcoin's up. Look at the Chicago Quantum Net Score portfolios. Those are up. The one from a week ago, Monday, is actually up more than the one, although not much more. It's actually a lot up from this Monday as well. So markets are up. Risk-attractive bets are up. Okay. The market itself, the S&P 500, is not up. And so it's a tale of two markets even now. Bad momentum. Negative stochastics, but yet some money is flowing into some smart bets. Bets that we run hours of compute power, and we used to run quantum computing, seconds of quantum computing power to be able to find these optimized portfolios. If you ever want these portfolios, you check out our website or you give me a call, and I'll give you the report that night. So we run the report when the market closes. You get the report that night. By the next morning, you're all positioned. So you would have earned your 2% today, and maybe sold by 9:30. So you're up 2% in an hour. Or maybe you would have done this one, and you would have been up about 2%, 2.5% in an hour. And, you'd wrapped it up. You'd be like, that was great, Jeff, thanks. I appreciate you making me all that money, and I'm going to take care now. Or you could look for fundamental analysis. Like we did fundamental analysis on ATI Physical Therapy, which gives us a very definite point of view on ATI Physical Therapy. The fundamental analysis is helpful, but then you watch the stock trade, and you realize that the market is afraid to offer any shares above 27 cents. It does not want to do it. 27 cents is the breaking point. Anything above 27 cents gets sold into. But they're not looking to give away the stock. No one wants to give away the stock. So they're pricing it around 28 cents. And by the way, I've seen this behavior for 3 days now. 28 cents. I bet it's the same guy with the 8,253 shares that was yesterday with 8,800 shares who didn't sell them all at the 27.88. Then you get a guy out there for 27.87 and everyone's trying to penny each other and whatever. It doesn't matter, right? If I really loved the stock and I wanted to buy it, I'd buy it at 28 cents and I'd take out all this stuff, right? I'd say 28 cents, limit up, boom, take them all out. But I'm not seeing it. I got a meeting to go to and I'm busy, right? We look again at the ATI physical therapy chart and you can see stochastics wise, it's been a very, very poor stock over the past 3 months. Really a poor stock, really just a terrible place to put your money until just recently. April 20th. Then it got a little better. The stochastics were low and then they rose up. Like something must have happened, right? Something good must have happened. By the way, if you're a subscribing monthly member, you know what happened because I sent you the report. But it's complicated, so I'm not giving it away for free anymore. Those are tough things there. Yeah, it's pretty weak performer. But I like to follow it. I'm looking at the conversations. By the way, you can see I wrote something. I am reviewing the TSA and have not made any trades today. I just completed my purchases of ATI Physical Therapy. I like to tell the world what I'm doing. I think it's great. Why buy now? And so I typed up 5 points of why to buy now. And then I typed up 3 points on why not to buy now. And then I talk about my own investment window, right? And so 5 reasons to buy, 3 reasons not to buy, and then a point of view. And then I talk about the TSA. So I'm trying to be very transparent with my holdings. It's good to be transparent, right? People want you to be. And so I think it's great. And I think so someone is taking out the shares, 27.87. So, ooh, love to watch that, right? Now you see 27.99 is ask, 32. Again, 27.88. So someone was offering at 27.87. And so the question is, if I look at the real time, data's not currently available. Oh, all right. Well, let's find out. I hope I'm not going to be late for my meeting. So something happened, right, with ATI Physical Therapy. I got to know. Right now. Before we go any further, do you love me? Will you love me forever? Well, let me sleep on it. Baby, baby, let me sleep on it. Let me sleep on it. I'll give you the answer in the morning. So, buy orders, 2703. There's still not any more buy interest. And FLTU, you see that right there, the MPID? That is a third party. That is a market maker, a supplemental liquidity provider. Think of it like an exchange member, right? And so they're offering at 2660, 2703. So I'm not sure what's going on here. Nothing changed in this book. Let's look at the Chicago Board of Options Exchange book. I should be seeing something there. I see some shares purchased, but it's like 12 shares. 12 shares for a quarter each. That's $3. Now, that is a way to get a rise out of me making a video. Although I'm sure no one cares enough to do that. That is enough to get a rise, right? So you're like, oh, look, I gotta look. I gotta see what's happening here. No change. No change. ATI Physical Therapy, it was a total little head fake. But nothing. It's terrible, right? You see it came right back down, 2703. So just for a moment, the stock peaks up. It paints the tape higher on 12 shares. Now, we don't know that it's really 12 shares. Look at all those shares. Oh, 1 and 2 and 9. Who's buying one share? 27 cents. You know who's buying one share? Somebody who wants to paint the tape and doesn't want to paint it for very much money. And so, all right, I can see where we're at here. We're in like fun and games land. And on that note, I'm going to sign out. I guess one last look. Let's take a look. How did the Chicago Quantum Net Score portfolio that I provided Monday morning on Friday's run, how's that doing? you can see you would have made pretty good money today if you were in it. If you look at it from a week ago when it was more risk on, you would have made even more money, right? So this thing's been holding for a week, 2 weeks. It looks great. Bitcoin is not quite as up, but it's up. So risk assets are looking terrific. The S&P 500 is flat to down slightly. It's flat. Guys, it's beach chop. Nothing happening. And so you have to be ready for a market where there's no trades. There's no action. And what that looks like. And I want to thank you for watching. I appreciate it. If you like it, check out the website, chicagoquantum.com. www.chicagoquantum.com. Here you go. Here's both our logos. Tech consultant, investment advisor. Here's my phone number. Work from the home office in Highland Park. Got a lot of services. If you want to look at an uprun, you get all the data it's a lot of data about it. Even a video. You can watch the video. You learn all about it. You can see all the things we give you. It's great. And this is our bull run. So yeah, and then if you don't want to do that, and let's say you just wanted to buy a service, I'd love for you to buy a membership. To be honest, it helps, right? $250 a month. I'll give you access to all of our proprietary research, and we'll give you a free run, which is normally $500, and we'll go from there. All right, thanks again for watching. You guys take care now. And again, one last look at ATI Physical Therapy. No movement. It's 2704. 2650, 2704, 2650. Nobody wants to be exposed that they're going to get the stock sold to them at 27 cents. But yet, to sell it, they're looking for 28 cents. So 1 cent spread is 4%. It's a pretty high spread. You have to really be committed. And so nothing's happening. It's just the way it is. So all right, you take care now. We're turning off. Bye-bye.